Joining me now, we have Taufik Subair, Senior Investment Research Analyst at Pathway Asset Management Limited. He joins me right here in the studio. Great to have you, Subair. So it's another trading month, definitely July. That's gone now, but it did leave us with some profit there of over 6%. Talk to me about what's played out. But first, before we go into that, we did get some data from the Central Bank of Nigeria. So there is, we have their financials, at this point, telling us, what the bank, operating surplus, what happened in 2025. 86.81 billion naira. I would say a growth of about 47.6% year on year. Total assets, 138.66 trillion. Total liabilities, 137 trillion naira, outpacing total assets. Total equity, 1.22 trillion. So looking at this now, this is from Central Bank of Nigeria. What is this telling us so far, in your opinion?
Yeah, thank you for having me on the show once more. Good afternoon to you. So looking at the data, so we have seen the reports from the Central Bank, and they have delivered on the core mandate, which is to stabilize the monetary policy environment and ensure that we have a robust banking framework. Now, when we look at the data and look straight into the financials, we see that the balance sheet, especially from the reserve side, has increased. So the balance sheet now, we have over $52 billion in reserve. But one thing that is interesting is to look at the liability side. That what is driving it? Is it sustainable? Is it something that we need to also look at the other side of the equation, which is the real sector, to know how can we make progress from this particular position? Because what we have seen with the number is only short step. So until we kickstart a strong investment cycle that will allow us to have a mixture of long-term capital in the system beyond the foreign portfolio investment. So we need to start seeing significant inflow of foreign direct investment so that the development can become sustainable.
Right, but looking at what played out in 2025, does this give us confidence coming into 2026, in your opinion?
Yes, definitely. So the monetary policy, what they have to do, they have exhausted the tools they have at their disposal, which is to make the interest rate environment friendly, just so that we are competitive on the global scale that can attract funds into the country. That is where we need the fiscal side to address the issues we are having in the real sector, which is elevated inflation. So government policy needs to align. So we need to start seeing significant improvements with security, just so that we can start having confidence from the business environments that we attract foreign direct investors into the company.
All right, now talking about investor confidence, let's review some of the top happenings that's for the month of July in the markets. Now, we see the best performing stocks in July. Fortis Global, that gained 136.36% there, about 234. FirstHoldCo, that was for the trading month of July, 131% rise there. Quite, I don't know if anyone expected FirstHoldCo to rise 131% in July.
So looking at what we have seen with the profit more than 100% in FirstHoldCo, so I would like to unpack the market by giving a little bit of macro. Looking at what we have seen due to the energy issues we have seen in the state of Hormuz, so the banking sectors and other financial services sector look very attractive, because it means elevated inflation is still going to be with us throughout the rest of the year. So capital is expected to flow into the financial services sector, though we did not see that coming with FirstHoldCo, because we saw that the chairman was buying into that stock aggressively. But after everything, we're able to see a circular that going forward, we should be expecting 60% dividend payout ratio, meaning whatever profit they make, they are going to be paying 60% to investor, and that is very interesting and juicy. And when you look at the banking sector again, if you look at I would like to backtrack a little bit to the data we just discussed around the CBN reports. So we realized that majority of the money that bank lent out went into the oil and gas sector. Now, oil is trading at premium, meaning those companies will be able to pay back the loans that they are owing to bank, which bank has already written off. So we saw that with FirstHoldCo. FirstHoldCo was able to recover over $70 billion from its non-performing loan. So it means they are going to be in the money, and that is the major driver of the reports that we receive for H1.
Right.
So definitely, it's expected to split into other banking stocks going forward, because we expect them to recover the non-performing loans that they have provided for in 2025.
I guess we're going to keep our eyes on the banks, at this point, I guess for this month of August. Let's flip over now. Let's see the laggards of July. Mature Industries for the whole trading month down 40.78%. Make the calls 32.35%. It's National Energy Insurance there. That was down about 28.32%. So those are the laggards there. So as a smart investor, what do? Seeing the big performance in July and the laggards, what do you do with this information going into this month of August?
So going into the month of August, we need to be cautious, because the indicator, most of the moves we've seen in July was on the back of the Q2 reports that we are expecting. Now, most of these reports has been reviewed, so we expect profit taking to happen in the short term. So while profit taking is happening, it is best to sit back and look at the leading indicator, which is going to be the macro. Try to understand where inflation number is going, and we've known that energy price is escalating, meaning we are going to be seeing inflation going upward, and probably yield is going to follow suit. So it means investors need to look at the macro to know what the leading indicator should be and how it's going to benefit the stocks listed on the exchange. So like I mentioned, the financial services sector is one, and when we look at other sectors like the industrial goods too is another one, because we've seen good numbers. So to wrap it up, investors should look at the numbers, allow profit taking to happen, and position as a very good entry position.
Right, and I'm sure some of these investors already holding some stocks right now. Is it time to start to reduce, or do you just hold and maybe add more positions on the dips, or what do you think is best strategy?
So if you have already taken position, so what you need to do is to consolidate your holdings by allowing the market to take profit a little, then accumulate when the valuation look very attractive. Because looking at the third quarter and the fourth quarter of 2026, the market still has potential to rally, because we are expecting the Dangote refinery to list. And again, we are also seeing some major indicators. We are getting interest from the foreign, we are getting foreign interest, especially from FTSE Russell. They are trying to reclassify Nigerian markets to the frontier market. So by the time we start seeing those positive indicators, it is going to bring liquidity into the market, and those people that have positioned will be the ones to benefit from the
right.
liquidity.
I guess a lot to unpack at this point, and I guess you would like to see another bullish month coming from July into August, but who knows? The market does what it wants to do. Thank you so much, Taufik Subair, Senior Investment Research Analyst, Pathway Asset Management Limited. Thank you for coming on the show.
Thanks for having me.